Tuesday, December 4th, 2018, Monaco 64, home of alternative economics and contrarian views. Before I start this morning, I'd like to thank all the subscribers, long-term subscribers, new subscribers, for the interest they have in my channel. I'd like to thank all the people who have donated to the channel through Patreon or through PayPal or through any other way. Also would like to point out that we have a Monaco 64 store on teespring.com, and that you can buy mugs like this, like a Monaco 64 and a Fed mug, and other merchandise, Billy mugs as well, and the Fed t-shirts. Today, I want to talk about the U.S. Yield curve, the bond market yield curve, Treasury yield curve, and about France a little bit. What I think France is a symptom of, all the riots going on in France right now that have been going on for a couple of weeks now. And it seems to me that the French leadership is losing control of the situation. They're even talking about bringing in a state of emergency. Before that, of course, I'll look at the markets this morning. It's around 7:40 a.m. Yesterday, of course, the Dow was up almost 600 points before the market opened, the futures. During the day, it actually traded lower. And at one point, I think it was up only 160. So, yeah, I think all that optimism about the trade truce, that's all fizzling out at the moment, in my opinion. The market yesterday finished up 287, but I would say that, that was way off the euphoric highs that we had on the open. So this morning, right now, the Dow is down 140 at 25,685. It has been down as much as over 200 points overnight, so it's down 0.5%. S&P is down 15, 0.5% as well. Nasdaq 100 future is testing 7,000. That's down about 60 or 0.8%. Gold and silver yesterday actually did fairly well. They did come off the highs late in the day, but this morning gold is up 6 at just under 1237. The high has been 1238.60. So I think there's going to be quite a bit of a fight here between 1235 and 1240. Really need to get back above this area. Silver is at 1448, up 10 or up 0.7%. One thing that I looked at, and I'll go over it quickly, past weekend, is that the open interest for gold in particular dropped quite a bit. What does that signify? Well, usually a big drop in open interest means that the market is either collapsed or and that people have closed a lot of positions. But it's weird because gold actually didn't do much, and there was a drop of, I'll tell you how much, because right now, according to the latest position, the total open interest is 442,000, and the week before was 525. So it dropped by quite a significant number, 552,940 to 442,940, almost 100,000. That's just in the futures. So I saw King World News. They think that's a sign that we could go a lot higher because the longs now can accumulate new positions, and the open interest has room to go up. But we'll have to see. Just wanted to point that out. Currencies this morning are fairly steady. We are seeing, though, the dollar drop quite a bit against the yen. That's the thing that I'm noticing here. We're down 0.5%, 113.12. or down 53 pips. Cable is pretty much unchanged, 127.29. That 127 level, keep an eye on that. If we break through there, the pound could drop a lot further. Euro 113.80. Euro's up 0.25%. Dollar is down 0.5% against the Chinese currency at 684.30. Brent crude is up 1%, 62.35. And the WTI is up 1 as well percent at 53.60. So, and the 10-year yield. Now, let's talk about yields. That the yield curve is actually inverting now. I saw an article yesterday on Zero Hedge that the 3 and the 5-year, the 5-year went below the 3-year, that it inverted. But this morning, I'm seeing that the 2-year is gone below, sorry, the 5-year now is gone below the 2-year. So, which is a much longer stretch, 2 to 5 instead of 3 to 5. Right now, the 2-year yield is at 282, and the 5-year yield is at 281. The 10-year is catching up. It's not inverted yet. I think that will be the signal that things are not well with the economy. And why is that? Well, usually when the curve inverts like that, it means it signals a recession. The other thing it means is that banks that usually borrow short term and lend a long term. So they borrow 2-year notes and they buy the 10-year to make the spread. They can't do that anymore. And that means that banks probably won't lend as much as they were lending. So that's why it's so important to keep an eye on that. Right now, we're still 14 basis points or 15 basis points away from the 2s to 10s inverting. But not only the 3 to 5 now inverted, the 2 to 5 is inverting the yield curve. And that in the past has been signals a recession. And now I'll segue into France and what's going on in France with all these riots. It came out of left field, I guess. You could call it kind of a black swan. Maybe people in France are not surprised because of the economic situation there. What triggered it is the carbon taxes, extra taxes on fuel, because President Macron, being a globalist and an ex-Rothschild banker, and I've spoken about this, the Rothschild family, they were the main drivers behind the climate change, environmentalism in the 70s, 80s, and they've been behind it ever since. Is it to really improve the planet? Well, it might, but I think it's more a financial thing. They've started out a carbon market. They're the ones who are going to benefit from it, right? And they don't care what happens to the average person on the street. And now the French, in my opinion, are waking up to that. Are they waking up also to the fact that France is so socialist? You have government spending over 50% of GDP. I would hope so, but I wouldn't put much hope on that. I think the French are still very socialistic, but maybe they'll wake up to that as well, that socialism actually creates misery for everyone. Am I saying that the fact that we bailed out the big banks and the very rich is right as well? No, that's wrong too. We need small government. We need competition. We need a level playing field. No bailout for anyone. But it looks like this is just like a symptom, in my opinion. Not only in France, but it could, how can I say, wake people up in other countries. It's just like a confirmation that all the lies we've been told, all the all the mope management of perception economics that the central bankers and the politicians have been trying to push onto the public, that hasn't worked in France. And what does that mean? Well, they keep saying that, well, we have synchronous global recovery. We have low inflation, the low unemployment. Things are going well. We're going to be able to raise interest rates. I think that's all a lie, especially in France. And you can, and with the EU or the Eurozone, it's they add up all the countries and they average it. And so when we hear the ECB president talking, he doesn't look at each country individually. And I've got here from The Economist, the economic and financial indicators for each country. And I look here at the Euro area, which is the area of, that is composed of the countries that use the Euro currency within the European Union, because there are, as some of you know, countries in the European Union that don't use the Euro. So Euro area GDP 1.7%, it says here. France GDP 1.5, so it's just below average. Consumer prices, France 2.2, but we're hearing from these protesters that they can't survive anymore. They can't make ends meet. So this 2.2 to me seems like a sham, right? And then we've got unemployment rate for the Euro area, 8.1%, still very high. France, 9.3, just above the average, right? GDP, just below the average. Interest rates, France, 10-year interest rates, 10-year yield, 0.74%. Well, in the US, it's almost 3%. So according to the central bankers, low interest rates are good. Well, it hasn't done France any good. That's the other thing that they're desperate for people not to wake up to. The fact that low interest rates are actually bad for the economy. And the only reason they're keeping it at these levels is to keep the financial system from imploding, the big banks, all the derivatives. And that's why they can't do it. But it punishes the public. How does it punish the public? Well, demographically, a lot of people are getting older. The population is aging, and older people have more assets, but they don't have any return on these assets because they don't work as long or they're retired. So they're getting very little income. So that's the other thing they don't want to, tell you about. That's what I think of France. It's just a symptom of a failed economic system, fiat money, central banking system. And yeah, we're looking at Brexit. Maybe this is gonna even surpass Brexit as a crisis. Who knows? Excuse me there, the camera got knocked. Who knows? It will be interesting to keep an eye on what's happening not only in France, because these things kind of spread. People from other countries look at it and they think, yeah, things here are not that great. Like in the UK, we got 21% of the population living in poverty, 14 million. We've got 1.5 million living in destitution, and we're told that unemployment rate is the lowest in 50 years, that there's no inflation, all that rubbish. So Zero Hedge here says President Macron on edge as up to 120,000 angry yellow vests, or gilets jaunes as they call it in French, prepared to storm the Bastille. Well, we know what happened over 200 years ago at the Bastille, don't we? So there you go. If you enjoyed this video, give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. You can also follow me on other platforms like DTube, Steemit, and on Twitter. I wish you all a great day, and I'll talk to you later. Bye.